let's look at this is a video on how to design a mutual funds portfolio. This is not the video for the whole video, it's a part of the video, and in this section we would look into some sample model portfolio. The intent is let's look at what the model portfolios are available online and see if this suits our purpose, or maybe learn how someone else would do a portfolio, and is that good enough for us? Can we use those portfolios as they are, or can we use them with a little tweak or minor tweak or major tweak, or overall, or should we go rebuild our own portfolios? Okay, let's continue here. Yeah, and I'm Sarwan Agrawal. Okay. Let's continue. Okay, let's continue to the next section here. So far we have done assets, section on assets, section on basics of portfolios. Now we'll talk about sample model portfolios. Next section would be rules of thumb for portfolio construction and building passive portfolios. And to build active portfolios, we would need to do it, select some funds, and then we would I will share how I do a portfolio design. Okay, let's continue. Okay, let's see what we do. Why do we study model portfolios? Okay, let's see what happens. Okay, we expect to learn from these. Okay, how experts do portfolios. So these model portfolios are done by some experts, and we learn how experts do these portfolios. Okay, and do they do match a growth fund against a value fund, or do they use blend funds? And do these portfolios are heavily on large caps, mid cap, small cap, construction, etc. And what's the mix of large cap, mid cap, and small cap with these portfolios use? Okay, and how much non-US international funds they have, and do they use any alternative funds? Okay, alternative assets. Let's continue. So we're trying to do how the experts do portfolios. Do they try to match a value fund against a growth fund? And what kind of mix-up of large cap, mid cap, and small cap is? And how much non-US assets they have? And do these fund portfolio use alternative assets, okay, like gold and precious metals, or maybe managed futures? Okay, let's continue. Okay, from this portfolio we can decide if these serve our purpose. Okay, so if we look at the portfolios, we can decide if they will serve our purpose. Can we use this portfolio as these are, or maybe with minor tweaks, or do we need to design a portfolio from scratch? It's like buying and build decisions. We look through these portfolios online, these model portfolios, and see if these are any good for us. They serve our purpose or not. Do I need to rebuild the whole portfolio, or can I do a minor tweaks? So model portfolios serve their purpose, and we can look them up for use in our. Okay, we'll study the following model portfolios. Okay, and first and foremost is lazy portfolios. Then Kiplinger's model portfolios. Kiplinger's Personal Finance magazine has put together a number of model portfolios online. Okay, and we do Schwab's portfolio. Schwab has put together some 5-6 portfolios online. Okay, and then we look at a Betterment portfolio. Then we look at portfolio we got in the other video. It's a cheat sheet video, and that's the link on a YouTube. Let's continue. So let's look at lazy portfolios. Okay, the least maintenance cost portfolios are the lazy portfolios. You build them and forget them, and just go once a year or so and do rebalancing. That's all required. These portfolios are fine for most folks. And the reason is you're too busy and life is a lot more than finance. Unless you really love tweaking with the finances and our mutual fund, do research, you get these portfolios from. These are about the best portfolios. They have 8 portfolios in this section, and a couple of them are really decent portfolios. Okay, you get these portfolios from. This is the link, marketwatch.com/lazy portfolio. Let's continue. And there are 8 portfolios at the site, and we look at 3 of those portfolios in. Let's continue. Here is the lazy portfolios, and here are the 8 portfolios on the site. Very first one is Aronson Family Taxable Portfolio, okay, and Fundamental Fund Advice Ultimate Buy and Hold, Dr. Bernstein Smart Money. Fourth is Coffee House Portfolio. Fifth is Yale University's Unconventional. Then there is a Dr. Bernstein No Brainer. Dr. Bernstein has a 2 portfolios here. One is for smart money, there is No Brainer, and Margaretville and second graders portfolio. This is the easiest portfolio here, and if you look at the returns here on 10-year column, second graders have returned the best 10-year return, and Aronson family had 8.15%. But considering this is a 90% stock and this is 70% stock, this I believe is a better portfolio than this one. Okay. Look at a coffee house portfolio has done rather well. This is 2. Okay, let's see what second graders portfolio is. It's a consider of 3 funds: Vanguard Total Market Index, okay, Vanguard Total International Stock Index, and Vanguard Total Bond Market Index Fund. Let's continue. Its allocation is 10% to bonds, and that's because of the investor age. And here is a reference here. T. Rowe Price has done a study to indicate that stocks have not lost money during any 10-year period. As such, for 11 plus years of time horizon, T. Rowe Price just 80-20 portfolio, and this portfolio only have a 10% of the bonds. It's a 90-10, okay, portfolio. Okay. Let's continue here. We note from the portfolio the bonds are 10%. That's income portion of the portfolio is 10%. US stocks are 60%. So domestic allocation is 60% and international allocation is 30%. From that we know US is 60%, non-US is 30%. Ratio of US to non-US is 2 to 1. So allocation to US is twice as much as allocation to non-US. Let's continue from here. We can use this portfolio as a template and build a portfolio for another risk level. 10% is taking a bond, is taking high risk. It's a risk return plot we had. So this is a riskier portfolio. That means 90% of stocks is a higher standard deviation. So we can tone down the deviation, still use this portfolio as template. So if we were to do 60-40 portfolio, okay, what we'll do, we'll get bonds at 40%, stocks, US stocks is 40%, and non-US stocks is 20%. Here's a 2 to 1 ratio here. US to non-US is a 2 to 1 ratio, and 40% is my allocation to bonds, as we were trying to do 60-40 portfolio. That's okay. So we know bonds 40%, US stocks 40%, and non-US stocks is 20%. Let's continue. That will be 60-40 portfolio on second graders portfolio. So we use second graders portfolio as template, and we built a 60-40 portfolio using a US to non-US ratio of 2 to 1. Okay, let's continue here. Note, if you note here, when you try and buy these Vanguard funds here, if you do qualify, and qualification currently is $10,000 minimum investment in an index fund. As of today, 28 July 2014, you should invest into lower cost Admiral shares. So Vanguard has a investor shares and also have something called Admiral shares. Okay, Admiral shares, these shares are less expensive, are cheaper. So if you do qualify, you should try to get into Admiral shares. Let's continue here. We're going to look through Aronson's family portfolio. Okay. Link for that is that one, which is a marketwatch.com/lazy portfolio slash Aronson family taxable. Okay. And that portfolio consists of US is 40%, non-US is 30%, and bond plus cash is 30%. So US to non-US here is 4 to 3. In the second greatest portfolio, it was 2 to 1. Here it is 4 to 3. Let's continue. It's 70-30 portfolio with a significant concentration in non-US stocks. Okay? 30% compared to 40% of US. That's a significant concentration in non-US. The portfolio contains this thing. This is VPACX 15%, VISPX is 15%, VFINX is 15%, that's VEXMX 10%, VUSTX is 10%, VEIEX is 10%, VWEHX is 5%, okay, and VISGX is 5% too, VEURX is 5%. VTSMX is 5% and VISVX is 5%. That's 15, 15, 15, 45 plus 30, 75. So 80, 85, 90, 95, 100. So we get 100%. There are 11 entries in the portfolio. Okay, let's continue. Okay, and the portfolio of Coffee House portfolio is at this location here. Okay, and this portfolio consists of Vanguard Total Bond Market Fund 40%. Okay. Vanguard Small Cap Value Index Fund is 10%. Vanguard Real Estate Investment Trust Index Fund is 10%. Vanguard Total International Stock Index is 10%. Vanguard 500 Index Fund Value is 10%. Vanguard Value Index Fund is 10%. Okay, Vanguard Small Cap Index is an AESX. This is the only one that does not have start with V here. Let's go through now comparison here. Okay, by far the Coffee House portfolio, which is 60-40, is about the best risk adjusted returns here. Okay, so this is the secondary portfolio, okay, which has a lower return and lower risk. Okay, so this is a high best return risk adjusted returns here, and Aronson family has a higher risk, slightly higher risk, and also has a higher return. On 10-year basis, Aronson family, which is 70-30 portfolio, has a better returns, and Coffee House, which is 60-40, which has a better risk situation here. Okay, let's continue. Okay. So from chart on previous slide, Coffee House portfolio is about the best on risk-adjusted basis. And over 10-year period, as of 25th July 2014, Aronson family portfolio, which is 70-30 portfolio, has best return. Okay, of the three we compared. Okay, let's continue. Now we're going to go look at some portfolios by Kiplinger's Personal Finance magazine. Okay, let's continue here, and then after that we'll look at the other portfolios here. Let's look at the portfolios here, and these portfolios are at this place here, kiplinger.com/tool/investing/T052 dash S001 dash investments dash portfolio dash finder slash index dot php. Okay, let's continue. We'll consider the following portfolios. It has about 10 12 portfolios. We will only look at some of those. Okay, one of them is low minimum portfolio. We will look at. Second thing, we will use low cost expert portfolio. Third, we will look at is from Kiplinger 25 list, we will look at portfolio for 6 to 10 years away, intermediate midterm portfolio. Okay, first we will look at low minimum portfolio, okay, which is at Kiplinger site, okay, and this is location here, okay, and which is a question mark portfolio select equals low min, okay, so this is the link for that portfolio. The portfolio consists of two funds, a mana fund, a mana income fund, AMANX, 60%. In the portfolio, it was 70%, but we are doing 60-40 portfolio, and the uh, more portfolio was doing 70-30 portfolio. Okay, let's continue here, and then there is a bond fund here, Homestead short-term bond, and it is 40% we have, and the portfolio had 30%. So we're doing 60-40. 60% is in mana fund and Homestead is 40%. Okay, if you want to do X-ray on a mana, you'll find out it's a lot of cash in here. Okay, so at least it's not all stocks. It has so this portfolio is, even though we say 60-40, it's probably like 50-50. Okay, let's con let's continue. So next we would look at next portfolio here, which is low cost expert portfolio. Okay, and then after that we look at the other portfolio for intermediate term. Okay, let's look at low cost expert portfolio. Okay, and the portfolio is Vanguard 500 index 25%. Vanguard total market bond market index is 25%. Vanguard total international stock fund is 20%. Vanguard small cap index is 15%. Vanguard inflation protected fund is 10%. So far get 25, 25, 50, 70, 85, 95 and some more. And real estate index is 5%. This is the only fund doesn't start with N, others start with V's. And as usual, when you can qualify, you go for Admiral shares, not the investor shares. Investor shares have a higher expense ratio and Admiral shares have a lower expense ratio. Let's continue. Now we look at next portfolio, which is a Kiplinger 25 from KIF 25 list and 6 to 10 years away, and the portfolio. That's intermediate term portfolio here, and that portfolio is at this location here, okay. And the portfolio is Fidelity New Millennium 25%. This is my large cap. Okay. Acre Focus AKREX 20%. Okay. And that's a double line total return fund is 15%. The double line total return fund is new, has about 3.5 4 years of history. Okay. And okay. Dawson Cox International is 15%. Osterwise Strategy Income Fund is 10%. Okay. And Harding Loevner Emerging Market is 5%. So with 25, 40, 45, 60, 75, 85, 5%. So 90% accounted so far. Homestead Small Cap is 5%, and Fidelity New Market Income is 5%. So we all got 100% so far. Okay, so Fidelity Income Fund, New Millennium 25%, Acre Focus 20%, Double Line Total Return 15%, Dawson Cox International 15%, Osterwise Strategy Income 10%, Harding Loevner Emerging Market 5%, Homestead Small Cap is 5%, and Fidelity New Market Income is 5%. So this is the portfolio for midterm portfolio, and it's the funds are from KIP 20. Okay, here's the comparisons here. So this is about the best portfolio we have. Kiplinger midterm, considering the risk and the rewards. Okay, return is for 10-year period is close to 12% here, and risk is standard deviation is less than 11. Okay, uh, this is this low minimum, and considering that this risk is less than 8, it's not a bad portfolio either. Okay, and this one is com compared to keep mid midterm portfolio here. This one is low cost expert portfolio is not as good. This one is actually decent portfolio considering it's less than 8% of standard deviation and better than 8% return. Okay? And two funds. Let's continue. Let's compare the notes. Okay, some of the funds have short history. Okay, so the best risk return behavior is for the midterm, keep midterm portfolio. Okay, we compare three portfolios, and this is about the best. Okay, expert portfolio use funds with shorter history. When funds have some 45-50 months of history, I don't have a clue how fund would have behaved during a crash of 2008. So when I do my research, I want to see how a fund behaved during the crash. Okay, and when you get newer funds with a shorter history, I don't know how the fund would have behaved during the. Okay, now let's go to next type of model portfolio, and which is portfolios from Schwab. Okay, let's continue. So Schwab portfolios are at this link here, and we'll consider this one portfolio, moderate portfolio consisting of large cap 35%, mid and small cap 10%, international 15%, fixed income, which is bonds and cash, 35%, and cash is 5%. 35% is 45 plus 15, 60, then 95 here, and 500%. So we got a large cap is 35%, mid cap and small cap 10%. International is 15%, and fixed income, bond and cash is 35%, and bonds is 35%. Here, cash is 5%. Okay, let's continue. Let's see how the Schwab would implement it. Let's continue. And Schwab's portfolio consists of Schwab fund here, Schwab core equity 13%, Lotus, which is also a Schwab company, large cap growth fund is 11%, Schwab dividend equity fund 11%. Okay, Schwab small cap is 10%, and FMI International is 15%. These first four are Schwab companies. So Schwab is trying to build up the portfolio using Schwab funds. And double line to return is 10%. Okay, and Metropolitan West is total return 10%. And Baird Core Plus is 15%, and a cash is 5%. Okay, that total adds up to 100%. Okay, let's continue from here. Even though I switched to DLTNX by a very similar TGLMX fund, the portfolio has for 2 months of history, which was done on 25th July of 2014. So these have a short history. Some of the funds have a shorter history here. So that means I cannot look at how the portfolio would have behaved during the market crash. Continue. Okay, now we're going to look at next portfolio. We are look at this first three here. Okay, next one is a betterment portfolio. Okay, let's find out, and then after that we will look at the portfolio we did in a cheat sheet. Continue here. For education purposes, why do I want a betterment portfolio? First thing is I'm an active portfolio type person. Okay, and this is a passive portfolio. So I have do have small portfolio at this betterment.com, and that portfolio is consists of is ETFs. Okay, betterment.com uses ETF. Okay, US total stock market VTI is 10%. Okay. US large cap value fund is IVE 10%. US mid cap value fund is 3.2%. US small cap value is 2.7%, and developed markets, this international, is 19.8%, and emerging markets 4.2%. Okay, okay, let's go. And so these two add up to 24%. So 24% is allocated to outside, international. Okay, so it is a 26% is domestic, 24% is international. It's a 50-50 portfolio. Okay, 50% is stocks, 50% bonds, or 50% it got 24% to international, and the rest 26% must be to the domestic. Let's continue. High quality bonds, it's a 17.8%, and corporate bonds, liquid 8.4%. Okay, let's continue. And international bonds are 15.7%. So again, this out of 50%, 15.7% is international. That's about a third of them bonds is international. Okay, let's continue. And emerging market bonds is 5.8%. So between these two, this is about 21%. 50% is income portfolio, and 21 is international. So 29-21 ratio is so it's a 42% of the bonds are in international. So the portfolio has short history. Betterment is using some of the newer ETFs. So far we have encountered two portfolios with longer history, and those portfolios are Coffee House portfolio, which has better risk adjusted returns, and Arnson family taxable portfolio, which had a better returns absolute manner. So returns were better, and risk was also slightly. Okay, now we'll have looked through this portfolio so far. Now we look at the portfolio we did develop in the other video, the cheat sheet video. Okay. Continue. And in the video, we developed this portfolio, which is Oakmark 13%, PRBLX 13%, FMILX 13%, HFMDX, this is mid cap 2%, WMCVX is 1%, which is small cap. Tweedy Brown Global Value Fund is 6%. Okay. Oakmark International is 7%. Remember that to get Oakmark International, you had to go through back door. You had to go buy that at the fund company itself. Okay, let's continue. And TCW Total Return Fund is 23%. Okay, and then Fannie Ginnie Mae Fund is 22%. So this is my portfolio. Okay, it should be 50-50 when you do the X-ray. Here it only sees 45% into income, but after you do X-ray, you'll find out it is actually 50-50 portfolio. Okay? When I do my comparison here, so this is active portfolio which we just discussed, 50-50 is superior to this is Coffee House portfolio, which is 60-40, and also the Arnson family portfolio, which is 70-70. So with 50, even with 50% allocation to bonds, this portfolio has outperformed the other two and at a lot lesser risk. Okay, so this is about the best portfolio we have so far out of the three we discussed. Let's continue. Now compare note for 10-year period ending on 25th July 2014, the portfolio cheat sheet video has best return at a least risk.